What's going on, everyone? Welcome back to J Trading. Today's video will be a bit different because I'm going to share my special experience on Boom 500 from last week and how I made more than $1,000. That's about 560 points on just one lot size. And plus, I'm announcing the winner of Ledger Nano X cryptocurrency wallet, or $150 worth Bitcoin from last week's video. So if you want to be part of it, please stay tuned till the end of the video. So without further ado, let's get started. Okay guys, before I explain how I traded Boom 500 last week, let's revise the chart that we have been talking about last week from Boom 1000, because if you remember, last week I did a kind of prediction on Boom 1000. So let's see what really happened on Boom 1000. So if you remember, we did analyze Boom 1000 clearly. I think I'll remember this. We drew a trend line like this. The market is still on uptrend, so we identified the trend line like this, and first we spotted our confluence area at the bottom of the trend line, then the second confluence area like this. Even we have been talking about how to trade the trends, like trading these areas right here, these areas right here, like every point of the trade. We have been talking how to take those advantages. So after this point, after the market went all the way up, we have also identified this confluence area. These areas actually they help us to take trade, because those areas are high pressure areas where most of traders take actions, because they are obvious. The thing that you need to know is the trading, like forex trading or every stock market or cryptocurrency trading, there is nothing new. It's just like observing and taking action. There are millions of traders right there, right? They are looking for the chart and looking for a better opportunity to take a trade, either buy or sell. So if the chart is obvious and every trader can see, like, let me show you this point. If you see this point and this point, they are almost at the same level, so every traders can see this point. That means they can spot this area as high confluence area. That's why we are trying to spot points where every trader can spot. So finally we got our confluence area at this point. Sorry, this is a bit higher, wider, so let me draw like this. Yeah, we did identify the market like this. We analyzed it. This is technical analysis. So finally the market was around this point, I remember, while I was doing the video. So I said, if the market goes down like this and tests this area, or in the lower time frame, if we see like rejections or any kind of pattern, we take buy entry and the market will go up. So as I said, it went up. Actually, I'm not bluffing, I'm just trying to show you guys how technical analysis is worth learning. I know most of you, like booming crash traders, they don't like to analyze the market. They just like to trade 1 minute chart, because every 1 minute there is chance, every 1 minute people can make money. But the thing they don't understand is that there is spike, there is danger. You are risking your money if you're not analyzing on the higher time frame. So go through daily time frame, then 4 hour, then after 1 hour, and go through the lower time frames like 15 minutes to analyze the market. So still now Boom 1000 is at this point. We are still at the confluence point. We are not sure that the market might break down. The market might break down, retest it, then trend might reverse for very long period of time, like months or weeks, or maybe the market will also continue like this in uptrend. So we don't know that, we're just at the confluence point. But if you go to the lower time frames, you get perfect entry or sniper entry. I know this is a daily time frame, so it might be harder for you to take a position, Now let me show you how I took a trade on boom 1000 on the lower time. Okay, this is 4-hour time frame. Now if you see here, we have the market rejection on the confluence area, again market rejection, again market rejection. So the confluence area is confirmed, it's valid that the market has been rejected many times. So at that time, if the market comes back, I remember the market was around this point, it was almost going down, so it pulled back up and came down to the confluence area that I have been waiting for. So here I got 2 rejections. If you see, even if you consider those small wicks, it will be 4 rejections. So I entered the trade here and it went all the way up. I followed the market with my stop loss and I got stopped out here because the market came back again. My stop loss was down around here. So the coaching that I receive from most viewers here is where to put the stop loss. It depends upon your account balance. If you have big account, put your stop loss down, like maybe far, like don't risk more than 3% or 4%. If you have small account, I recommend using like gold digger strategies or scalping strategies, or maybe sniper entries. But this one right here, we got rejections down below from the confluence area, so that might be harder for you to trade on very small accounts like $10 or $20. Yeah, this is what happened on boom 1000. So still now we are on this confluence area. Actually we are a bit far from the confluence area, but we don't know what the market will do next. So let's wait for the market to come back to the confluence area, and if you see any kind of confirmation or maybe to the trend, you can enter a buy position and you can put your stop loss down below the confluence area. Or maybe if the market breaks the trend line, that will also be another opportunity for selling boom 1000. But right now let's go to boom 500 and let me show you how I took that trade. Okay, here we have boom 500. This is chart of boom 500, and on a daily time frame, here we have a big momentum downward and we got the swing low. That's the low of all time, and the market went up. We got another swing high and the market came back again to that swing low, the same point. So we got another low here. That's an indication that this area can be a confluence area or a support area. So that's confirmed support area. Then next the market tried to pull back up and came down again. So the area that I wanted to focus on right here today is this point. So on daily time frame, the overlook of the market looks like this. So finally, from this overlook, we can identify our support area like this. We can draw our support area like this. So the market was around this point. The area that I traded is here. So the market went up and was trying to come back. So now let's go to lower time frames, or I'll zoom and show you what happened. Okay, remember the area that I wanted to focus here at this point, I took a position around this area and my take profit was down below. So before I come to here at this point, we have, if you see, we have big momentum downward, and almost all candlesticks are red, and this is a very bearish momentum. So the market came back down to the swing low from a very long time and tried to go up. This is 4-hour time frame, then came back again. We got kind of double bottom pattern. We have the first bottom here and the second bottom at this point. The second bottom here, that's on the key support table, remember. So, and we have a neckline also above at this point. This is a neckline, and the market broke that neckline, went up and tried to pull back. So this point right here, it was a sniper entry. I remember it was a couple of weeks before, so I took this trade also. This was also a big win, and my stop loss was down here. This is a double bottom pattern. This is not the portion that I wanted to talk today, but okay, let's come right here at this point. What happened? Let me show you. Okay, so now the market came back down and tried to pull up, came back and tried to pull back. If you see here, there is something clear that you all can see. The first thing I do is always I spot rejection points. Here I have around 4 rejection points at this area, and again the market came back to that point and being rejected. So we have another rejection at this point also. So this indicates that this area is high confluence region. So I've been waiting for the market to come back to this area and test. Maybe it might break that area or test it and go in the same direction. So I have been waiting. I got almost 3 rejections. The first rejection here, second one here, and third one here. Fourth one also the market came back to that point and tested, then it came down. Again fifth time it came back, tested that area and went down. So this is confirmation that the area we have spotted is a reliable and a valid confluence area. How many rejections we have? 1 2 3 4 5 rejections. That means I can draw my confluence area or rectangle like this. Yeah, this is exactly what I did. I drew my rectangle like this and I waited. And if you see, there is also another trend line or another higher low formation in the market. We had the low here, then another higher low here, and another higher low here. So what I did, I connected those points together. This is easy. I have been explaining this on a couple of videos past weeks. You can see them, the link will be in description. So I connected these points together and I got one pattern that I know, that's called ascending triangle. Ascending triangle pattern looks like this. Look at this. We have higher points, those are equal, and we have another higher lows which are not equal, which are like creating higher lows and higher lows. And we have also the market like this. The market moves up, comes down, moves up, tests the point, comes back again, and every time reaches up to that point it comes back and tests. So finally the market might break down and test the trend line or maybe confluence area at this point, and it might go down, or in another direction it might break up and test the resistance and it might go up. So we don't know what will happen, so all we need to do is wait for the market to break out of the triangle. If you see here, we have the market moving in upward direction, right? It went up and tested this area, came back, tested the trend line. Again it moved up and tested the same region, came back, tested the trend, again went up and tested. So this indicates that the pattern is confirmed. This pattern is ascending triangle. Let me show you on a picture. If you see this picture, we have the same pattern that we got from, sorry, let me zoom in a little bit. If you see this picture, we got the same pattern. The market went up and we got rejection up there, and the market tried to pull back and went up again and got rejected back, and we got another high here. This was low and another lower high, so we can connect this point by this red trend line, and again the market went up and got rejected by the same level up there and came back, again rejected by the trend line and went up, finally rejected back. This point right here can be taken as confluence area. There is high tension because after this area the market either will break up or break down, so those are opportunities either to buy or to sell. So on this picture the market broke down and it went all the way down. This is called ascending triangle. What happens in ascending triangle is if the market breaks down, it goes almost the same height as the triangle. The height of the triangle can be measured from the lowest point right here to the highest point, so this will be the height. So if you measure this point, the market will drop the same height down and you can put your take profit at the same level, so you can close your trade around this point. Okay, when we come back to Boom 500, we got the same pattern that we saw in the picture, right? This is called ascending triangle. Finally, I was waiting for the market to break and I got a rejection here. To be honest, I entered one trade here at this point because I wasn't greedy to tail, but the rejections that were past days, they indicate that the market is no longer going up. It's weak to go up. And I had also another confirmations. I'm not gonna talk about them in this video. So I took one position here, and it was a good area actually to put stop loss also, because my stop loss will be near that point. Then, as I said, the market came down, it broke the triangle, and that's the indication of bearish momentum or a bearish market. Then for another entry, the market pulled back. Fortunately, the market pulled back, and I got another opportunity to enter. If you remember, or maybe if you're a member of my Telegram channel, I posted this analysis on Telegram channel also. Some of you got a good profit on this point. So here we have a rejection or a trend reversal at this point, trend reversal on the trend line, so I can take that as an entry or confluence area. So I took another trade. That means totally I took two trades, the first one up there, second one here, and for the second one my stop loss was near the confluence area. Then immediately after I entered, the market tried to win to go up, but finally it drove all the way down. And if you measure the height of the triangle, that will be the same height the market dropped, and I took my profit at the same level from the very low point of the past weeks. So I took my take profit at this point. I know it might look very complicated, but it's very simple. Always stick to price action. Look, I know all the pain, I know all the struggle that you are feeling, because I've been through there. All the videos on YouTube, they are all dependent on the indicators. They lag behind the price action. Price action can tell you what is coming, but the indicators, they tell you what happened in the past. So you go to YouTube videos and try to catch spikes or do the trend or trade the trend, then you end up losing your money. But I promise, if you stick to price action like resistance or Fibonacci or support or trend line or any kind of candlestick patterns, I assure you that you will make money through time. But give time to learn. Go to the description. I have Telegram channel where I post analysis only, not signal analysis, just kind of signal, but you learn from them. So join the Telegram channel and we will grow together. So the link will be in description. It's very easy. This is what happened on Boom 500. First I identified the confluence area at this point, then a triangle happened, ascending triangle happened, and the market broke down and tested the confluence area. So I took profit from the support or the key support from the previous point at this point. If you go to the daily time frame, Boom 500 is at the very key support area, and it's an indication that the trend is being reversed. Maybe will go up. I'm not your financial advisor, please remember. The market might go down again also, who knows. So I'm just waiting for the market. But this is what happened. This is what happened on Boom 500. Okay, so you can finally measure the points. The first entry is here, and I took my profit here. That's about 380 points. And the second entry is here. That's about almost 300 points. So you can calculate this according to your lot size. This is it. This is what happened on Boom 500, and this is how I made the market. Alright guys, now to the most exciting part of the video. It's time to pick the winner of the Ledger Nano X offline wallet, offline crypto wallet, or the equivalent price. That's about $150 on Bitcoin. So it's time to pick the winner. Who will be the winner? Winner, chicken dinner. The winner is Daniel. Okay, Daniel, congratulations. He commented, great job, really, he's genius. Okay, thank you Daniel for commenting. Thank you all. Next time there will be another giveaway, so please Daniel, contact me. Use the Telegram link on the description below. Yeah, see you next week.